Hello everyone and welcome to another Daily Waves on Cryptos. It's been actually quite a while since the last video, and today we're here again to have a look on BTC as always. And well, I had to pick out of the ones that were on vote for this time around, because Ethereum, Rune, Matic, and if I'm not mistaken, one more had the same voting. So I've actually chosen Rune because I think most of the people might be more interested in that rather than anything else. So without further ado, let's dive into BTC and Rune and see how things have evolved since the last Elliott wave count. As always, I would like to start with the Bitcoin liquid index and look at the longer term, just to remind you of the long-term count. My idea is still the same, that this is a super cycle wave 3. We're going to see a super cycle wave 4, and then from there we're going to continue higher. We've talked about cyclical analysis many times. You can visit previous videos to see what is the expectation on that end in detail. But just to summarize, it looks like this particular price action that we see currently taking place, it's more similar to the run that we saw from the top of 17 and down to the 18, and of course they had the very big correction before this run started back in 2020, the last one. And I want to just tell you that we've kind of said, and based on that particular period of time and how the price evolved to the upside, we would be expecting a move to the downside closer to the end of February, or we'll be expecting the low actually closer to the end of February. Now, to be honest, if this is indeed A, B, and C, as I have been talking about for a while, it's highly unlikely that we're going to see that leg being a C wave and to get us below 15K, right? That is going to be a huge crash. And given the time frame that we have, just like a month or so, I'm not sure how likely that is, but it's becoming more unlikely as we consolidate above the 40K. Either way, based on this timing analysis, the expectation is that the low came exactly 512 bars in this particular case before the halving date, which is similar to what we are expecting now. The low is in already here, and if we were to see something similar, the expectation would be again to see that huge drop in the next month to develop a wave C. Wave Cs are typically fast. Now, if we continued in a way that we should be looking for wave C to end, that means we're going to go and do the low after the halving period, and this is probably going to be the first time that we're going to see something like this happen, because every single halving, I mean, apart from, if you look at this, yes, we did have a low here, but not a low before the previous. We did see a drop in 2016 after the halving, but it was just a minor one. We've probably gone down, what is it, like 30%. Okay, so it could be a case where we might like see something like this, and that drop to the downside takes place like that after the halving. That would still be expecting to offer us a very quick wave C, and in Elliott waves, wave Cs typically tend to be quick as well. So what I'm actually saying in few words is that the closer we get to the halving date and we still remain bullish, especially above the low over here, the swing high of 32, whatever that is, then the chances of our count playing out are reducing. But either way, I still have the same expectations, cyclical, when we're talking about cyclical relationship, I am expecting a big drop to the downside. Now, if it doesn't produce a huge wave C to see a new low, then it would most probably just be a correction that is unlikely to break below 32K and then continue higher. That could be the signal for a bigger correction and then possible continuation to the upside, okay? Because we need 5 waves to move up, let's not forget. So if this is 1 and 2 and this is 3, we need the 4 above that low and the 5, okay? This, if we get 5 waves up completed, then we can change our count. But until then, and as long as we have like an ABC so far, okay, you can see that, then the count remains the same. We expect that, we expect a new low. So with that said, let me just take you a little bit closer here and just to quickly remind you of the expectation. Let me just quickly hide this in this particular actually I shouldn't have done that, but anyway, this is the count that I have in mind, okay? Looking at it from a sort of long-term perspective as well, if you look at this decline as an A and B, it comes as at the perfect timing because we've just rejected the top of the channel, okay? It still is a case where though, if we look at the extension, we have failed to come to the 100% as well, so it remains a correction for now. We did identify 50K or so a while ago. Let's not forget that is also the 79% correction, okay? And kinda 79. And if we lose 62, let's say the 40K, that is going to add a bit more pressure to the downside in the short term. Now we're looking at logarithmic the charts here. Let's just not forget that when we look at the typical charts, the correction came up to the 61.8, which is a very typical correction level for an ABC leg. Okay, so just wanted to mention that as well. And what else, since we are here, we can go back to the BLX for a second just to show you how quickly, how related these two cases are. If you look at the correction over from the low to the top over here, we exactly came at the 79% as well in this price action back between 17 and 19. So we've stopped exactly at the same level. However, not not as fast that move was. So we have a little time to fall. That gives us an expectation very sharp wave C. What else that tells us is that this move to the upside is not that bullish either, because that was very bullish and then it was very sharp and very fast, and we saw a huge and steep decline. That is slower. So it also implies that we might not see such a steep decline, okay? But at the same time, it also suggests that since it's not as, as driven, as powerful, it might just not be what we expect it to be, unless of course if we just make the assumption that we're still in wave 1, and that would be the case, as I said before, if we get 1, 2, 3, 4 and 5. That would be the most bullish case for me, okay? But as long as this is a 3 wave, then the expectation is for a correction. Now onto the shorter term a little bit. As you well know, of course, there's many different variations here. You can visit previous videos to check on those. As an ABC, I am looking at this. I've seen many different counts. There is no ending diagonal here, guys. I've seen many ending diagonals here, even open or contracting or open. There is no such thing. In the one case, you have to assume that wave 4 ended here, and that would be 1, 2, 3, 4, and 5. This is the only valid diagonal. So how can you go and assume that wave 4 is here, and this is just wave 1 of an ending diagonal? So a lower degree move with a much extended time frame compared to an actual higher degree correction in 4 is highly unlikely. An open diagonal is also not possible if you wanted to assume this as 1, 2, 3, 4, 5, because there is overlap here, because wave 5 is shorter than wave 3, and wave 5 has to be longer than wave 3. Okay, so let's just, you know, follow the rules when we do some count. So instead, I've got this one in as 1, 2, 3, 3, 4, and 5 here. You know, there is no overlap because there is some sort of a flat correction here. You can even say that that wave 2 is here. Actually, that would be even better scenario. Yeah, wave 2 here. No overlap because this is a flat. I repeat. Okay. And now over in the short term, guys, we have two expectations. Okay, and this one I have right now is the most bearish out of the two. This one suggests that we have a truncation in wave 1, we have wave 2 done, and we are starting a new wave 3. This is wave 1, we're going to get a correction in 2, and then 3, 4, and 5. That's going to be an extended wave 3 REP. The other scenario, which is less bearish and more even like a little bit more bullish in the short term, would assume that this is 1, 2, this is 3. You have an actual triangle here for a 4, and then this is a wave 5, and that will assume an ABC. And you may ask now, why do I not go with a triangle scenario? Well, I don't go with a triangle scenario because wave 2 took us 2-3 hours, and we are expecting here a triangle in a wave 4 that comes as an A, B, C, D, and E here. Not only, you know, there is a running triangle that kind of is like, by bringing wave A here, we are kind of leaving one wave out, you know, internally. It's not just that, it's also the fact that if we measure the last wave, wave E, at least not in that case, no, the 50% is okay. If we assume that we don't want that and we want to respect that structure, then we'll have to make that a wave A. And then that means that wave B will be here, C, D, and E, which makes it less likely. So the one triangle, it's like we force that structure to be counted wrong. And in the other triangle case, we are assuming a very large wave A, even in comparison to the full wave 2, and then a very short B, C, D, and E, especially D and E. Actually, they are very, very, very tiny in comparison. So that is the reason I'm looking at truncation at 1 and a correction in 2 and 5 waves down as the first wave down. Now, this, of course, has an invalidation, right? An invalidation typically for me is when we see the 79 break. That is up to around 42.90. So I do expect more upside in the short term because that looks impulsive and that looks corrective, but I think we might stop around 42.30. Maybe perhaps we can go up to 42.90, sorry, but I don't think we can go above there. If we go above there, then start waiting for a fifth wave to the upside to confirm another leg up and to also support that case, which is the short-term alternative. Okay. Now, if that happens, we would expect a deeper correction closer to the 50, at least for starters. For starters, it's the 38. Then you got median around the 50, and then you can go as high as 45, 50 again for the 61.8. And things are going to start getting a bit more bullish around the 47K. And if that happened, guys, because there is also a count for this, that would assume that we are still in wave 4. That would be 1 and 2. That would be 3. That would be a wave 4. And then we will get the fifth wave up and then start falling. That would actually catch a lot of traders off guard. Okay. Now, I don't want the 3 day. I want the one. Oh, it's the 1 day. Fine. We're gonna go and look at RUNE. Now, RUNE has put the low in, and we've identified this even in our previous video. I don't remember when that was, but that's the case. How I'm looking at it is as a W, an X, and a Y. And this is a new 5-wave move to the upside that has just ended. Okay. We also failed to cross above the base channel. So technically speaking, we are still in a bearish trend in the longer term. We have just actually returned back within, right below 540. That doesn't mean we are bearish. Okay, but we expect to see a correction that's going to be for grabs, and that might be where we could finally, start receiving signals for a potential spot long-term opportunity for Rune. So how do I see this taking place? As I said before, we have had a very nice attempt up from the low 80 cents up to nearly a 10x here, guys, for wave one. Okay, so you can understand this is a very powerful move, but in the short term, I think we might still be wanting to see prices to go at least to the 50% to consider spot buys. Now, that's not necessarily always the case. Of course, that could just stop where it is now because an actual ABC correction has ended. If I'm not mistaken, we're going to go soon in and have a look. But given where we are with Ethereum, with BTC, and a lot of other L1s, it seems to me that a correction down to 240 is very, very, very typical. Okay, especially since we don't really have a confirmed season for bull run, guys. We don't, okay, because we haven't seen like assets moving up simultaneously. We just have seen random picks and random moves. So this is important to for context. So how do I see this over? I'm looking at this as an actual leading diagonal, and this is, guys, like an ABC over here, yeah, and this wave B is an actual flat, and it's a regular flat. And then I'm looking at an ending diagonal because you've got an ABC here, again, ABC, ABC. So what I'm expecting to see, and that was the point that I wasn't sure about just a minute ago, in the short term, no, the wave C is not done yet. I expect an overlap of wave 1 to complete wave 4, then one more wave down, and then we'll continue up, okay? On that move to the upside, I expect the 79 last to hold, okay? It might be much lower. What is a typical thing to do in Elliott waves is go and correct and connect all our like important levels of the same degree. So I would come down and correct and connect, W. I mean, for now, we have already done A and B, let's just say A and B, right? So you know that we are in an accelerated trend according to this particular structure for Rune. So for its own trading sort of analysis, this is already in an accelerated bearish move. Now, I expect, as I said, overlap and further continuation to the downside. Now, the move to the upside might continue somehow like this, and one more to the upside and come to the top of that channel where we can expect prices to reverse and see that wave Y taking place. Okay, now, as I was saying before, of course, we don't know where wave W is going to end, but if we just make the assumption that the low is now in, we would have to come and put that down here and then assume or try to find levels where there is confluence between the channel, between the extension of that wave to the upside when we have the first wave, and other indications, including, of course, what's going on with momentum, volumes, and divergences, if there are any. So this is my my top count for Rune. Because there is always an alternative, and I have to give you that. If we lose 62% and we head towards the 79, then the 79, and again, as I said, this is my thing, is where I change things. So in this particular case, I would have to come down and assume that this is 1, 2, 3, 4, and 5. And this is a wave A, because literally we don't have anything that tells us that that is not a 5-wave leg, since we have a triangle here and a flat over here, and flats and triangles for the guideline of alternation are perfect combination. The only thing that really doesn't match here, maybe it's just this count. Maybe it's not even the case. Let me quickly check. We need to see where that ends. Okay, this is not an issue at all. So it might as well just be a leading diagonal instead of a W here, guys. We just need to confirm by measuring wave 3 versus wave 5. And you see, again, at 78. So it's borderline the wave 3, but this can still be assumed a leading diagonal, okay? And then you have an ABC here, and then you have the third and the fourth and the fifth. that can still all of it be a wave A. So imagine having something like this, A, B, and C. Once we lose 124. So that would mean that that's going to be a very big move to the downside for Rune as well. That is the alternative below. I do think the low is in because we have seen very nice move to the upside. We've come to around the 750. We did a 10x pretty much. This is the main thing I'm looking. I'm not looking at the retracement per se in this particular case. I'm just looking at how much price has multiplied since that low. Not many of the altcoins have done that. BTC, even from 15K, it's done, what is it? It went up to 49K, 50K. So that's not even, you know, I mean, if you consider it, it's just done like a 2x from that low or so, okay? So this is nothing compared to what we see here. And that is why my basis scenario, my basis thesis is that the bottom is in for Rune. I hope this helps. And well, thank you for watching. As always, leave your comments, leave your analysis if that might be the case. Be respectful, and don't forget, none of this is investment advice. It's purely educational. Take care, and I will see you again probably sooner next time.